while farm equipment and machinery company Deere beat analyst earnings estimates, boosted its annual forecast. Deere did miss slightly on revenue. Stephen Volkmann is with us now. He's an analyst at Jefferies. According to Bloomberg data, he's one of the most accurate in the business on Deere. It makes him a Bloomberg best. Steve, thanks so much for joining us this morning. So the earnings beat, the forecast is raised, but revenue looks like a very slight miss. How much attention should we be paying to that?
Well, I think it's interesting. I mean, this is a company that's been beating and raising numbers significantly up until now. I'd actually characterize this as more of an inline quarter. There was about 6 cents of a gain from a lower tax rate. So when you just look at the operating numbers, I think they were very much in line with consensus. They did raise the forecast, but consensus was already higher than their guidance. So they just raised to basically where consensus is now. So when I look at this, I think it's very much an inline quarter, and this is from a company that's been crushing numbers in the cycle up till now.
Steve, we've all seen commodity prices soaring, especially this past month. We all know that as commodity prices go up, it's a natural connection that Deere competitor Caterpillar should see more demand for their products. Is there any way this can turn against either of these companies?
Well, of course, commodities are a double-edged sword, and you correctly point out that these stocks are all positively correlated with commodity prices at the end of the day. But of course, they buy a lot of commodities as well, and so raw material cost inflation has been an issue in the space. We saw that with Deere this quarter. Their incremental margins, their dollar of EBIT per dollar of incremental sales was actually fairly low, about 16% in the quarter here. I think people would have liked to see that somewhere in the 20s, and that was basically an issue of raw material costs kind of biting them on the other side.
We know that Deere announced it's going to be building a new manufacturing facility in Northeast China. Demand for agricultural products obviously very strong there as well. They're going to be investing $80 million. Are we going to see more from Deere in expansion overseas?
I think so, and Deere's already actually a fairly meaningful player in China, although it's a very small tractor market right now. It will grow over the next decade or so and become meaningful, and obviously they want to be there. But you've seen them make some investments in Russia as well. That will be a large ag equipment market over the next few years, and in fact they raised their forecast for that market pretty significantly this morning in their release. So they are obviously very much focused on emerging market growth. That's a long-term story, but it's one that'll continue to play out.
Yeah, I'm taking a look at the stock price. I mean, it seems like obviously the market has rewarded Deere in the past 12 months. If I look, it's up around 50%. It's trading around $87 a share. Is this fair value, or the fact that you're just saying that they are investing in emerging markets, that's going to continue to be a growth story? Is there much more to go on the stock?
Well, I think to be clear, emerging markets is a long-term growth story. Deere makes all its money on very large, high-horsepower equipment. All the emerging markets are very small tractor markets, very low horsepower, low-margin type markets. And so these need to grow into a sweet spot where Deere can actually make some money there, and that's going to take some time. The key issue right now for Deere is sort of where are they on capacity constraints. And as you point out, we've had a great cycle here. They're selling a ton of equipment. They're frankly bumping up against the top end of their capacity, and so the question is really how much more can they do this cycle, and that's really, I think, what investors are grappling with here.
Steve, thanks so much for the time. Steve Volkmann joining us there. He's Managing Director of Equity Research at Jefferies.